Good morning. We had a pretty good week this week in the grains. Corn up a penny, soybeans up 22 cents, Chicago wheat up 9 cents, Minneapolis wheat up 9 as well. The live cattle, these are the positive markets, and crude oil up 435. The negative markets had some significant price action this week. The live cattle down 790. The feeder cattle down 19.50, gold down $78, silver down 1.5 cents. Actually, the action within the week was much greater than this, and we'll talk about that in a minute. A potential top in all of these markets, which is very interesting, probably with the exception of the live cattle. Crude up 435, and the feeders and the gold and silver, obviously the major price action this week. So let's look at some of these charts. I want to get right into it. Here's the corn chart gaining a little bit for the week. So looking more and more positive here, like the bottom has been formed in corn. Soybeans showing some strength, actually more strength in soybeans than the other markets. President Xi and President Trump meeting next Thursday, and some weekend conversations between top level officials as well. In the wheat market, a bounce finally in wheat. Maybe we finally got the bottom. And in Minneapolis, even showing some strength this week. So finally, some positive things. But the grains look nothing like some of these other markets. Look at the crude oil up $4 or $5. We put out a recommendation Monday morning to buy crude at $56. Bam, we hit it on Monday. And look at that, you're already up $5 on the on that crude trade. Crude hit 56, was the low of the year. Again, what a great time to buy crude. Of course, sanctions on Russian oil this week as President Trump continues to try to put pressure on Russia to solve that Ukraine war. Look at these other markets. So, wow, we had some significant price action. Remember, gold broke out a year and a half ago above $2,100 here. And bam, in a year and a half, we doubled gold, went over 4,200, actually almost to 4,400. But a big drop here on Monday and Tuesday this week. So we have a potential top in the gold because we've dropped more than 7% from the previous high. We did it in 2 days. Wow, significant price action here in gold. Gold was down $250 on Monday. In the silver market, actually even more dynamic. Silver blew off the top, ran above $50, which people thought would never be possible again. We did it in 2011 or 12, and bam, we run across $50 and then bounce below it, and we have had about over a 10% decline in silver. My top picking strategy is that once the market drops more than 7%, sell the next recovery. And so in silver, ironically, that sell is going to be right there at the $50 mark. And in gold, ironically, if we back up here to gold, the sell mark is right here at 4,200, selling a 50% recovery in that market. So for the livestock producers, that is interesting for feeder cattle, because feeder cattle, with their limit down move Friday, and the synthetics are trading about $5 lower than that. With the cattle, feeder cattle, we would have a top because we've dropped about 9% from high to low. That is significant, because what would you sell? You will sell a recovery of a third to half of that in the top picking strategy. So you'll be selling those feeder cattle right up in this area. I'm going to go into more specifics in that, but it's rare that we have the potential to top three markets all at once. All three of these are the big bull markets, and here we've got it the same week. The exception is live cattle. Live cattle had a limit down move on Friday as well, but that represents only a 6% decline. And so even though fat cattle may have topped, of course, the talk is we're bringing in some Argentina beef into the United States. Of course, we put trade restrictions on Brazil beef, probably, and the low herds in the United States, probably causing the high cattle prices. Of course, you got to let people make some money and pay them to produce that product. We haven't been paying cattlemen for a long time, and that's well deserved. So anyway, the talk is trying to bring in Argentina beef to keep cattle prices from being so much higher. You know, when it gets right down to it, when prices get high, everything happens to try and, the producers produce more. Right now we're feeding our cattle to fatter and bigger weights just to try and produce more beef because it's so profitable. And the consumers use less. And essentially, there's all kinds of things that go on that do that. Prices get high enough to get the attention of officials, get high enough to get the attention of everyone. And of course, we make adjustments in our purchasing and use patterns and in the production patterns for those who produce that product. So that always happens in one way or another. That's what the way markets work. High prices cure high prices, low prices cure low prices. And apparently we have three markets that are getting high enough all at the same time. Very interesting. We'll see if those are actually tops. But I wanted to show this last chart about my top picking strategy is when it's greater than a 7% decline after a long run higher, you sell the next bounce or recovery. So here are the numbers, and I'm going to go through those painfully slow on the first one. Here's gold. 43.98 was the high. 4,021 is the low so far this week. That difference is $377. $377. The drop divided by the high is 8.6% decline. If you add now, okay, so that's your potential top. You drop more than 7%. Okay, now how do you sell it? I'm usually a sell about a 30% to a 50% recovery. A 50% recovery would be $188. So 4021 plus 188 is 4209, 4200 exactly. Our target 4200 was our target to sell gold once we broke out above that old high, doubling the price of gold. So it's interesting. So stop close only. You made your sell. Now you also have your stop above the previous day's high, maybe a closing price. That is a top picking strategy. Doesn't always work. Probably you get 3 or 4 of these signals before a top is actually formed. So you could get stopped out a few times, and I'm sure people have, like in the feeder cattle market. Let's run through those numbers on silver. Silver, actually, there's the high, the low. The difference is 695. That's a 12.9% decline, much more emphatic of a potential top in silver. Add a half again, three and a half. You're selling at 50, the old high. That should be significant resistance. I would sell a little under that, actually. I would sell a little under 4,200 too, because that should be significant resistance. Maybe 39.80, 39.98 or something like that. And in the silver, 49.96. So these are the modifications you do if you're an old trader and you've seen this game before. It's not your first rodeo. So your stop close only is above that previous high. Now feeder cattle, 382.80. 347 low, 35.50 was the decline. And I'm using 347 because that was a synthetic. We closed at 352 on Friday, but that was limit down most of the day, and the synthetics were trading $5 lower, about 347. So I'm using that synthetic. I think feeder cattle will open $5 lower on Monday unless something significant happens this weekend. So that's a 9.4% decline. Add half again of that, $18. You're going to sell feeder cattle at 365, maybe 360, 364, 361, somewhere around there. But you want to sell those feeder cattle, and your stop is pre-specified at this 382.80, the previous high, above that somewhere. The fat cattle, we have not hit the 7% top picking strategy. So the high was 248, 233 low. 15, that's only a 6% decline. Therefore, I do not have a price to sell. What's my target? How much for recovery do I sell? I don't know. We haven't hit a potential top yet. So none of these are specified. Could fat cattle top if feeder cattle have? Certainly. But I don't have any potential sell points here at this point. So very interesting situation. We have a very big and dynamic market, not in grains though. We have it in cattle, we have it in gold and silver, the precious metals. We have potential tops in these three. which is interesting because what does gold, silver, and cattle have in common? Almost nothing, except funds trade all of them. So if the funds are getting out of those three commodities, what are they going to get into? Well, I have some ideas. Crude oil up sharply this week, and grains, corn, soybeans, wheat, looking like they have bottomed. They got a long ways to go up before we get even close or near our old highs or new highs like we've done in cattle, gold, and silver. But I highly suspect that some of these other commodities are going to start attracting that money, particularly since the United States cannot stop uh, deficit spending. We're deficit spending 1.8 trillion, almost $2 trillion a year. About 50% of our spending is deficit spending, and we got a shutdown going on in the government. Like politicians always are, they can't agree on anything. They need to actually cut spending and increase revenues, but they can't agree on anything and they have accomplished nothing. The dollar is in deep trouble if we continue on this spiral. Maybe what they should do in this shutdown is lay off a third of the government because they can't afford to spend any more money. It's just a ridiculous situation. And, you know, government is probably the worst investment in the world if you're trying to accomplish something because you get about a 25-cent return on every dollar that you spend there, whereas private investment has to be higher. You have to pay interest costs too. So anyway, interesting thing in the market, these top picking strategies probably the most important, and there's a lot happening in these markets if you pay attention. There's fundamental news too, of course, but I'm focusing this week mostly on the price action because I think it's telling us a lot. You have a great weekend and good marketing.